Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Tuesday. These are the stories that set your agenda. Stocks struggle for direction following a global sell-off that saw cryptocurrencies lead declines in risk assets. A closely watched auction of 10-year Japanese government bonds draws solid demand. Ukrainian President Volodymyr Zelenskiy says a new peace plan draft looks better. US Special Envoy Steve Witkoff now heads for talks in Moscow. Plus, more turbulence. Airbus reveals it needs to inspect hundreds of its best-selling A320 jets for potential quality flaws in the aircraft's body. So this largely remains a global equity story that is struggling for direction after the softness we saw in Europe yesterday, a little bit weaker by the end of the close. A similar picture on the S&P 500 and the Nasdaq as well by the end of the close stateside. And today, European futures pointing to very modest gains of 0.1%. The FTSE 100 here in the UK looking to lose around 11 points as things stand. S&P E-minis then, the futures on the S&P 500 pointing down by 0.1%. Nasdaq 100 futures looking to build on the losses of yesterday, currently pointing down by 22 points. Let's flip the board and have a look cross asset. There is a bit of stability when it comes to things like Bitcoin and when it comes to treasuries. You did see a sell-off across treasuries across the curve yesterday with yields up about 7 basis points on the 10-year. Today the 10-year is at 4.08 and largely unchanged. Again, stability, and you can tie that to the bond auction in Japan where there was that strong demand, and so you haven't seen a ripple effect in terms of a further sell-off in global sovereign debt as a result of that. Strong demand in Japan, and that has given some pause, or at least underscored some of the concerns, but addressed some of those concerns, I should say. Euro-dollar at 1.16, currently the single currency largely unchanged. 86,000, just shy of 87,000 on Bitcoin after dropping about 5% yesterday, currently up 0.6%. We'll see if that stability around Bitcoin continues. Brent at $63 a barrel, largely unchanged on oil. It's been a mixed picture over in Asia as well. Let's bring in Min Min Lo in Hong Kong for a check on the Asian markets with a lens also on what's happening in Japan. Min Min.
Yes, Tom, we are seeing a very modest recovery here in Asia, especially after the meltdown in the crypto space and that risk of sentiment really spreading globally. But we are seeing now the Hang Seng giving up earlier gains. It was in the green earlier this morning, now in the red. Nikkei also largely flat. The Kospi really leading gains in Asia today. There are a number of factors really supporting the Korean markets today because investors are looking towards this bill that could potentially cut dividend tax. And you add to that Samsung seeing a 2.5% jump today as the company debuts its first trifold phone a few months ahead of rival Apple. That is helping to lift the Kospi. We are also digesting the CPI data coming in unchanged at 2.4%, hotter than the target rate of 2%. So that certainly dims the prospect for a BOK rate cut. We can see the one still fairly flat, but at the weaker end of things at about 1,468 level. But we're watching the Japanese markets very closely. As you said, Tom, the bond auction today, 10-year bond auction, closely watched. The demand was better than expected. The bid to cover ratio above the 12 months average, and that's helping to put a brake on that global bond sell-off. You can see the yields just pointing fractionally lower, but the 2-year yield still hanging on above that 1% level, and certainly that higher yield after what the BOJ Governor Ueda said yesterday, that is helping to lift demand for the auction today. We are seeing the yen slightly weakening, still holding on to 155 levels, but watch the yen because we have the combination of a Fed rate cut coming and a BOJ rate hike on the table as well, and this combination sets us up for a yen rally, so it could be heading towards the 152 level, something to keep an eye on, Tom.
Yeah, policy divergence between the Fed and the BOJ potentially being underscored as well if those decisions come through from those central banks. Min Min Lo in Hong Kong, thank you very much indeed. And as mentioned, that keenly watched Japanese 10-year auction drew solid demand. This comes after Treasuries slumped amid a surge in corporate bonds and a global sell-off in government bonds. Let's bring in Bloomberg's executive editor now for Asia markets, Paul Dobson. Paul, just remind us why these Japanese auctions have global ramifications.
Yeah, for so long, Tom, nobody really cared about Japanese government bond auctions. They went from time to time completely unnoticed by global macro investors. Not so much the case anymore, and there's a few reasons for that. We, historically have sort of described JGBs as being a global anchor for bond yields all around the rest of the world. The interest rates are so low in Japan that a lot of Japanese money has found its way into other markets globally, particularly US Treasuries, for example, but also in France, in Germany, in the UK too, because they can get better returns on their investments by putting money abroad, and they've got humongous savings as well. So now the concern is with those yields in Japan rising slowly, admittedly, but steadily at the same time. There's going to become a moment where some of those Japanese long-term sort of pension pots or insurers are going to start looking at their home market and think maybe these yields are better at home now rather than taking on foreign exchange risk or overseas risk, or maybe, just on an inflation-adjusted basis, they're more appealing for us in any case. And so the concern among global investors is they start to bring money home en masse, and that starts to hurt demand for other assets all around the rest of the world. So far, there's been more fear about it than reality of it actually happening, but that's the kind of nagging doubt in everybody's mind. And when governments all around the world are ratcheting up spending, there's more competition for that money. Higher yields is the best way to lure in the cash.
OK, we continue, as you say, to monitor the implications of that. And Treasuries, US Treasuries, largely stable in the session today, but strong demand coming through for that Japanese bond auction. Paul, we're also, of course, monitoring what's happening in the crypto space with that sell-off, pretty pronounced sell-off in Bitcoin yesterday. Today, stabilising as well, just up 0.6%, just below 87,000. What is the assessment in terms of the direction of travel for Bitcoin in the days and weeks ahead? Is there more pain to come?
Well, the market is eyeing quite nervously the lows that we saw over the past couple of weeks, and whether we will have another test of those, and the 80,000 level kind of below there as being a potential barrier, but something that the market may want to test at some point. Bitcoin tends to be a very trending asset, so if it's going up, it carries on going up for quite a long time. If it comes down, as we've seen over the past 6 months, it can come down quite aggressively as well. And the problem is, at the moment, and it's a very basic markets thing to say, Tom, but not many buyers out there and plenty of sellers still. People have been forced out of their holdings of these leveraged ETFs where they've been trying to get 2 times, 3 times the return on Bitcoin as it's been going up. Now they're pulling that money away. Some of those companies that are sort of set up explicitly to buy Bitcoin are having trouble with their valuations relative to the amount of Bitcoin that they're holding, and talking about potential selling as well. So the market has that on its kind of worry list, which is why they're talking about the potential for it to come lower again. It's such a sentiment-driven asset class. What it would need to turn things around would be some change in that sentiment, some change in the outlook that brings people in and sort of then has, again, one of those rushes where people are trying to get ahead of one of each other and push the prices higher again.
Yeah, companies like Strategy in focus and certainly feeling the pain right now, given their exposure to crypto and to Bitcoin in particular. Paul Dobson, thank you very much indeed, Bloomberg's executive editor for Asia markets. To geopolitics now. The European Union's top diplomat has expressed concern about US efforts to push Ukraine into a lopsided peace deal. Kaja Kallas says pushing Ukraine to surrender would only encourage Russia's warmongering. This comes as US Special Envoy Steve Witkoff heads to Moscow with a draft deal that Ukraine's President Volodymyr Zelenskiy said looks better, but territory, he says, remains a sticking point.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the 3 main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
OK, the plan looks better. Let's bring in Bloomberg senior news desk editor Balazs Pence. Balazs, are we edging closer to a deal?
Well, unfortunately, I'm afraid the answer is we're not really sure. Certainly, it's been a period of very intense diplomacy, with some very, very high-level, high-stakes meetings ever since the publication of President Trump's 28-point plan to bring a halt to this war. And as we have heard from President Zelensky, it does seem like the U.S. and Ukraine are now at least in broad agreement over the outlines of the plan, and the 2 sides were able to get something that's closer to what they want to see. But as Zelensky said, some real sticking points remain, including the issue of territory, and we can expect that to be very, very high on the agenda when Special Envoy Witkoff travels to Moscow now.
And what specifically are we going to be watching for in terms of that? In terms of that meeting between Witkoff and Vladimir Putin? They've met before, of course. Witkoff has expressed his almost admiration for Putin, his respect, and we know that. That's been published in reports. This is someone who spent a fair bit of time now in Moscow and interacting with his Russian counterparts. What are we going to be watching for from the US envoy?
Well, it certainly does seem like Steve Witkoff has been able to build a very strong relationship with some of his Russian counterparts, and he has a very good rapport with some of President Putin's underlings. The question now is whether we will see a breakthrough, and unfortunately, based on some of the statements from the Russian side, it doesn't seem likely that they are willing to sort of climb back from some of their demands. And even though we have seen very credible reporting that suggests that the Russian economy is creaking under the weight of sanctions, it doesn't look right now like they are at the point where they feel like they need to walk back some of those demands that they put forward earlier. So we will be looking for any sort of movement on these demands over security guarantees, Ukraine's neutrality, the caps on the Ukrainian military, and of course territory, which has been the sticking point from the earliest moment of this war.
Bloomberg senior news desk editor Balazs Pence with that update. Balazs, thank you. Here's what else to be thinking about today. 7 a.m. UK time, we're going to get nationwide house prices as expectations build that we're going to get another rate cut from the BOE later this month. So a gauge on house prices here in the UK that have, in some areas at least, struggled recently. 7 a.m. UK time, we're also going to get the Bank of England's bank capital stress test results. So we'll bring those to you as speculation builds that maybe the BOE will ease those capital requirements for UK lenders next week. And at 10 a.m. UK time, we will get Euro area CPI, so the latest inflation print out of Europe. Coming up, we will hear exclusively from Taiwan's foreign minister about the heated diplomatic dispute between China and Japan. That interview is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Taiwan's foreign minister says the current dispute between China and Japan could drag on for a year. Our chief North Asia correspondent, Stephen Engel, joins us now from Taipei. Steve, you have been speaking exclusively with Taiwan's foreign minister, Chia-lung, then. What were your key takeaways? This is the first TV interview for foreign media that this foreign minister has done since taking up the post. What stood out to you, Steve?
Well, clearly they have been speaking with Tokyo after those comments, of course, to Parliament in Japan by Takeichi-san that essentially, talked about the scenarios, the hypothetical scenarios, if there was ever an invasion of Taiwan, that would also be an existential threat to Japan, a survival-threatening situation. Of course, those comments really rankling Beijing, no doubt. And there's, hence, since then, this diplomatic row that has turned into an economic, repercussions, of course, for Japan by China. Now, Taiwan clearly, with the foreign minister that we spoke to today, was trying to downplay the situation. The comments are already out there, and they've already done back-channel communications with Tokyo, as well as other like-minded nations around the world for advice on how to handle this. And clearly, the Foreign Affairs Minister, Lin, telling me that they would like to see things, and it's in the interest of all parties, including Beijing, to diffuse the situation right at this point.
It's also not in Xi's interest, because the economic downturn and also the high, the rising unemployment rate. And also the trade conflict with the United States. So I think it's not in everyone's interest to have the China-Japan disputes on the issues related to Taiwan to escalate.
So by not provoking Beijing, you feel, this is the way I'm reading it, you feel that this could die down sooner?
Yes, I think so.
How long?
Because I think Japan has already shown its willingness, because it's in the parliament, it's in the QA session.
Yeah.
So they have some backgrounds. Yeah. So it's not just a different policy change from the Japanese side, but for Beijing side, maybe take I think maybe a year to stabilize the situation. But for saving Xi Jinping's face, he has to do something to show his domination in the disputes.
And again, the big question there, Tom, is what is going to be the impetus for those temperatures to come down short of an apology from Japan that China has demanded? And Japan, Tokyo, has given no indication that it is willing or is going to offer an apology. So again, the Minister Lin essentially saying it's going to need some time for a face-saving move, at least a year for Xi Jinping to have that face-saving time to show that he's being tough on Japan. Both sides, Japan and China, playing to their domestic audiences, while Taiwan here is sort of sitting back and hoping that temperatures cool down. But in the meantime, of course, they're also trying to solidify their support, not necessarily just because it only has 12 diplomatic allies around the world, but with what Lin calls like-minded nations. That's including the United States, Japan, South Korea, and others around the world, including India and European Union. Taiwan really making a concerted effort as well to get not diplomatic support, but also moral and economic support from the Europeans.
OK, really interesting. Stephen Engel, our chief North Asia correspondent in Taipei, bringing us an exclusive interview. Steve, thank you. Some other news making the headlines this Tuesday morning. The White House defending the Pentagon's handling of a September attack on a suspected drug-running boat off South America. It's denying a report that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. Spokeswoman Caroline Levitt confirmed 2 strikes on the ship, but says the order for the second attack came from a US Navy admiral, not Hegseth. And the White House says Donald Trump received what it called a preventative MRI of his heart and abdomen as part of his annual physical in October. The president's physician says the scan showed normal organ functions with no acute or chronic concerns. It is unusual for most people to undergo MRIs during routine physical exams, and the White House had been under pressure to provide more details. Coming up, more turbulence for Airbus as it reveals hundreds of its best-selling A320 jets need to be inspected for potential quality flaws. We bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Airbus shares fell the most since April after the plane maker revealed that inspections are needed for hundreds of its best-selling A320 jets over potential flaws in the aircraft's body. Let's bring in Bloomberg transport reporter Danny Lee. Danny, what do we know about this latest issue for Airbus? This seems to be a week where the focus is on challenges around Airbus, and now the latest in terms of one of its suppliers.
Yeah, I mean, this is something about quality and production quality, which Airbus will be acutely sensitive to. And really, this revolves around some paneling on the fuselage, which could be a risk in terms of flight safety. Not an immediate risk by any means. It's more to do with the thickness of how some of these panels have been designed. But it's an issue that Airbus was made aware of, and it's something that kind of affects around several hundred aircraft, mostly newer aircraft, some aircraft that are in service, some are going through the final production line. And so therefore, it's something that Airbus wanted to swiftly take action on to try and resolve the issue, although it's something, an issue that is not something that is necessarily an immediate cause for concern, such like the software glitch which caused or had global disruption over the weekend for airlines.
Yeah, so they had to work through that, didn't they, over the weekend with those updates across hundreds of their aircrafts to the software, and now they're dealing with this issue. We focus then, and we do now, on the Airbus targets in terms of delivery by the end of the year. Some pretty ambitious targets. Does this derail that ambition?
I think it's a very good question, given what Airbus is doing to inspect the aircraft. Particularly, there are still many hundreds of these aircraft which are potentially at impact that are still on the production line. Whether they have to be reworked, and that could then slow down the output of aircraft that are needing to be delivered. And the key thing here is that Airbus has now delivered at least 70 aircraft in November. That leaves them with a record 165 aircraft it needs to push through in order to hit its annual targets. Now, its annual target is 820 deliveries to airlines. So it's under real pressure. And for quite some time now, management has said it's going to stick to those annual targets. So given these latest concerns around quality, or new concerns around quality, it remains to be seen what impact that will have on its outcome for the rest of the year.
OK, we'll continue to monitor, of course, whether they can meet that target and how quickly they can get this issue sorted. Danny Lee, thank you very much indeed with that update on Airbus. That's a stock to continue to watch after the sell-off, of course, yesterday. We'll mark that one for you at the open this Tuesday. Let's get you up to speed on some other stories of the day then. Top market-making firms, J Street and Citadel Securities, are on track for record trading revenue gains as they challenge Wall Street's dominance. J Street's third quarter turnover jumped 18%, putting it behind only top players JP Morgan and Goldman Sachs. Citadel's sales, meanwhile, rose 9%. Both have benefited from market volatility, often fueled by President Trump's shifting policies. And Bloomberg has learned that Warner Brothers Discovery has received a mostly cash offer from Netflix as it fields a second round of bids. Sources say the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Warner Brothers, the parent company of HBO, CNN and its namesake film studio, officially put itself up for sale in October after receiving multiple unsolicited offers for all or part of the company. And Cyber Monday spending grew more slowly in the US than Europe due to US President Trump's trade war and aggressive interest rate cuts by the ECB. Salesforce says global online spending, mostly from Europe, increased 5.3% compared to a year ago, while US spending rose by 2.6%. This is just an estimate, and the results could still change in the final hours of Cyber Monday. And price inflation here in British shops eased to the lowest level in 5 months as retailers rolled out Black Friday deals earlier than usual to entice shoppers. The British Retail Consortium says the rate of inflation slowed to 0.6% in November from a year earlier, compared with 1% the month before. Deals were particularly good across health and beauty, electricals and fashion. And Bloomberg's Markets Today team are hosting a live Q&A today at 1 p.m. London time. Digital subscribers and terminal clients have the exclusive opportunity to ask questions. Join them to discuss how UK markets have fared this year and what could happen next. Coming up, talking of the UK, the Office for Budget Responsibility chairman has quit after the early leak of Rachel Reeves's budget. We'll bring you more on that story. It's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks struggle for direction following a global sell-off that saw cryptocurrencies lead declines in risk assets. A closely watched auction of 10-year Japanese government bonds draws solid demand. Ukrainian President Volodymyr Zelenskiy says a new peace plan draft looks better as Vladimir Putin plans to meet with US Envoy Steve Witkoff today. Plus, Airbus facing more turbulence as it reveals it needs to inspect hundreds of its best-selling A320 jets for potential quality flaws in the aircraft's body. Let's get to the markets then after a bit of a soggy day for European and US equities yesterday. The S&P 500 closing down by about 0.5%. The Nasdaq 100 in similar territory. Today, European futures also striving for direction after a little bit of softness yesterday. FTSE 100 futures pointing down by 19 points. S&P E-minis after the losses of yesterday pointing a little lower by 0.1%. And Nasdaq 100 futures looking to drop 47 points. Let's flip the board and have a look across asset. You do have stability in treasuries this morning after the sell-off across the curve yesterday with yields up 7 basis points on the 10-year. The 10-year currently yielding 4.08. We continue, of course, to get the data coming through of the US inflation data on Friday, the PCE gauge, of course. Euro dollar at 116. Bitcoin stabilising around that 87,000 level after the sharp sell-off yesterday, currently up 0.6%. And Brent crude at $63 a barrel. Now to the UK, where the Office for Budget Responsibility Chairman Richard Hughes has quit after taking responsibility for the premature publication of the contents of Rachel Reeves's budget. You'll remember this, of course, last week. The early release of the document marked an unprecedented breach of procedure, with the OBR's inquiry calling it the worst failure in the organisation's history. Joining me now is Kit Reeves, co-editor of Bloomberg Markets Today blog. What's been the reaction to this, Kit? Good morning. To the OBR, in some respects, not a huge surprise that the head has stepped down, given the tumult and what the remarkable scenes that we saw last week with essentially the OBR coming out essentially an hour before the speech itself. So not a huge surprise on that front, but nonetheless significant.
Yes, definitely significant, and it plays into these worries over the credibility of these big institutions. So we've had issues with data quality at the ONS. There have been questions raised even over the Bank of England's messaging. So it plays into worries over trust and credibility, and there'll probably be greater calls for reform and questions raised over the power that the OBR, the budget watchdog, has over how it influences the public finances. In terms of the market, though, it's probably unlikely that there's going to be a big reaction. The market was very much focused on the budget, the contents of the policies, and it will probably continue to digest this, probably over the next month and maybe even into next year. But for the broader kind of sentiment, it is significant, and there'll be lots of questions raised over reforms and what it means going forward. OK, and this at the time when the Prime Minister continues to defend that budget, indeed the Chancellor herself as well, defending Rachel Reeves, Prime Minister Keir Starmer yesterday, amid accusations that the Chancellor misled the public about the state of the UK's finances ahead of that budget last week. Take a listen.
So we had, on the one hand, £16 billion less than we might otherwise have had. We had clear commitments that we'd made throughout the process as to what it was we were going to achieve. Therefore, against that backdrop, it was inevitable that we would always have to raise revenue. So there's no misleading there. During the overall process, the numbers improved.
So, Kit, Starmer then drawing and just reiterating his support for the Chancellor, Rachel Reeves. Does that then draw a line under this? But do we move on after this? Has he made the case convincingly?
I mean, that's probably what markets are hoping for, that, we can kind of move on forward and look at things like the Bank of England, interest rates, inflation data, all of that kind of stuff. So for the market, it was really focused on the budget, and it got what it wanted really from that. It got higher fiscal buffer. It got measures which were hopefully not going to be inflationary. So for the market, that's what it really cares about. In terms of where it goes with the politics at the moment, this is probably just noise for the market. But if there's any kind of spillover or escalation or questions over leadership, then that could start to play out. But we're not there yet, I would say. No, not there yet. Well, I mean, we did see gilts selling off a little bit more than some of their European counterparts yesterday, and presumably some of that was down to politics. But the focus may be shifting now, so we continue to monitor gilts in the session today. We also have the Bank of England's financial stability report out at
7 a.m. UK time. What are you and the team going to be watching for from that report?
So this is a twice-yearly publication, and it really takes a peek under the bonnet of the financial system and any kind of risks there and whether it can withstand shocks. So what we'll be watching for is any kind of commentary on issues such as private credit and how well the banks can, withstand any kind of shocks. We've had already reports out from the Fed, the ECB, the Riksbank, Germany's Bundesbank, which have flagged issues such as geopolitics, potential impact of trade tensions, high valuations in the market, given the AI trade has been pretty big this year. So we'll be watching for similar themes and also any comments on the bank's capitalization. So it'll just be an interesting look into how things stand and whether, there are any risks that we need to keep an eye on.
Yeah, given their earlier warnings earlier this year about valuations in the tech space from the BOE. It'll be interesting to see if they build on that in the report today. Kate Rees, thank you very much indeed. Co-editor of Bloomberg Markets Today and the blog, of course, that you can continue to monitor on the website and on the terminal. And Bloomberg's Markets Today team are hosting, meanwhile, a live Q&A today at 1 p.m. London time. Digital subscribers and terminal clients have the exclusive opportunity to ask questions. Join them to discuss how UK markets have fared this year and what could happen into 2026. Let's get you up to speed on some other news stories this Tuesday. Prime Minister Keir Starmer, meanwhile, says the UK will adopt a more pro-business approach in relationship to China, but not trade its national security for greater trade ties. Starmer sought to clarify his government's approach to Beijing last night in his annual speech on foreign policy. Starmer said the UK needs a policy that recognises China is a defining force in technology, trade and global governance, while also posing a national security threat. And talking of China, China's DeepSeek has unveiled 2 new versions of an experimental AI model, claiming the new service matches the performance of OpenAI's flagship GPT-5. DeepSeek says the new model performs well across multiple reasoning benchmarks, suggesting China's open source systems remain competitive with Silicon Valley's frontier proprietary models. And China's top-down AI strategy sets the country up to achieve a large-scale deployment that the US will struggle to replicate. The national rollout leverages low-cost open-source models and gives China a greater chance of improving economic productivity. But this model comes at a cost to private sector tech firms. These are the findings of a new deep dive on the Bloomberg terminal written by Robert Lee from Bloomberg Intelligence, who is with us now. A really significant report, and I know a huge amount of work has gone into this, Rob. It's a huge report, loads of detail in there. What are your main conclusions then, Rob?
I suppose you could use ChatGPT to summarise it, but yes, there's a lot of detail in there that I hope your viewers can find useful, and they can find that on the terminal via the mnemonic BI space deep. But the main conclusions are, I think it's China's economy, its productivity across the economy that stands to win out overall. I think that's the overriding conclusion. But ultimately, somebody has to bear that cost, don't they? And I think the government is playing some role in that with a heavy level of subsidies going into the national AI rollout. But it's actually the shareholders of the private tech platforms, the listed tech platforms, in other words, the shareholders of your Alibabas and Baidus, who are effectively subsidizing the national rollout to help democratize AI, so that under the government's overarching AI plus strategy, AI can be deployed rapidly across every single sector and every region of the nation. So the economy will win, but it's subsidized by the private companies.
So rapid deployment, rapid adoption, we're seeing that in China, and the innovation continues. We've had a reminder of that today with DeepSeek and its latest model. We've had QN recently, of course, from Alibaba and the updates there. Rob, how is this all happening, given that China does not have access, or at least officially have access, to NVIDIA's most high-end AI accelerators?
That's true. I mean, it's a classic engineering challenge with the earlier export bans that were put in, somewhere close to 2 years ago. It's forced the Chinese developers to work a way around that, to tunnel under it, to work to find other ways. And effectively, they've moved to smaller, more computationally efficient models. DeepSeek being a prime example. When DeepSeek broke the headlines back in January this year, there were numbers that they disclosed highlighting the degree to which they have really forged ahead on a global basis on the cost down front. So that's one of the main areas. And also, I think, as you've seen in recent headlines, the national suppliers of equivalent AI chips, the likes of Huawei and even Baidu, have ramped up capacity massively. So net, that's enabled to China to continue its developments relatively unhindered. I will still say the US maintains a performance lead, but even looking at third-party, in fact, US-based benchmarking services, the performance premium enjoyed by the likes of OpenAI and ChatGPT is only in the region of 10 to 11%. I think that would likely surprise a lot of people. So they are in the lead, but a very small margin.
OK, so that performance premium of 10 to 11% for US large language models versus their Chinese competitors, and presumably that is starting to be squeezed. Given the deep dive you've done then, Rob, what is your best assessment of who currently has the best chance of winning this global AI race, if we frame it that way?
Within the China context, again, as I've said, it's clearly the economy. That China is looking to rebalance the economy away from prior years of being heavily reliant on the property sector and investment to drive these new productive forces of economic growth. It's clearly looking at the high-tech sector, AI being an element of that, along with the semiconductor sector. These are the future drivers of China's economic growth. And that ties in with what our colleagues at Bloomberg Intelligence have been writing extensively for the best part of 2 years or so. But on a global basis, again, I think China, rather than pursue technology for its own sake or pursue the frontiers, which is interesting, I think, China at its heart is a very pragmatic nation, and they're there ultimately to make money. So if you look at the capex spend from Chinese platforms, it's approximately 10% of what the US is spending. So they're really doing it on a budget. And there has been real true innovation from Chinese tech companies, with DeepSeek being the prime example. So as a result, with rising innovation in the sector, we're very intense focus on cost down and looking for near-term, short-term wins within the economy. I think, China is arguably emerging as the global leader in the low-cost, real-world application of AI. At the end of the day, all its investment is all very interesting on an intellectual level, but ultimately you want to see a return on the investment and you want to be making money. So I think China's strategy, from where we stand at the moment, makes a lot of sense.
OK, winning on ROI, at least for now. Robert Lee from Bloomberg Intelligence, and all that analysis, of course, can be found on the terminal, and some of it on Bloomberg.com as well. Rob, thank you for the detail. Coming up, we're going to stay with the tech space. We're going to be talking to one of Europe's most influential tech investors about why European AI funding is reaching new heights and whether it can continue into 2026 as well. Our conversation with Hussein Kanji, founder of Hoxton Ventures, is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, funding in European AI is reaching record highs, with valuations in the median price tag for AI startups in Europe more than 20% higher than in 2024. To dig deeper into this and also what's happening in the AI space and how Europe can compete, let's bring in Hussein Kanji, founder of Hoxton Ventures, invests in early-stage technology companies and appeared on the Forbes Midas list in Europe in 2023. Some big exits for you historically with Darktrace, Deliveroo, and, of course, a number of exciting portfolio company members that we can look at as well. Hussein, thanks so much for your time. So the momentum was there in 2025 for European tech and the flows for VCs into some of these startups, everything from AI to deep tech to what's happening in the healthcare space. Just give us an overview of what happened as we get towards the end of this year and how that sets us up for 2026.
More and more momentum in the European market for technology and for AI in particular. People forget that one of the leading AI labs in the world was DeepMind, which is now part of Google, born and raised right here in London, in terms of right down the road at King's Cross. That alumni base and all the things that are affiliated with everything DeepMind have kind of created a whole wave of companies out here in the European continent, both in the UK as well as continental Europe, and that's just compounding. We're now starting to see examples of companies out here in the European market that are competing head-to-head with the American companies, and in some cases are the market leaders. I'll give you a few examples. Yeah. So in Voice AI, which is basically turning me and you talking talking into text and turning that into a really natural sounding voice. The pioneering company right now is 11 Labs, homegrown here in London and in Poland. For video generation, a little character on the screen, you tell it what to say, kind of it pretends to be me or you. Kind of we would call it a deep fake, 10 years ago, but these days, you call it an AI company. Leading company in the world, Synthesia, born and raised right here in the UK, came out of UCL. We're starting to see many more examples of this. Lovable is a similar type of thing, coding development. You have an idea for a website or for an app. You want to, have the AI basically write that. You go to a website, you do it. There are a couple of U.S. companies. There's a company homegrown here in Sweden. So we're starting to see more of these examples. My suspicion is over the next 5 years, we're going to see more and more breakthroughs kind of coming out of the European sphere. More and more of these companies turning out to be like category leaders and world leaders.
When do we get to a point where European startup, where Europe is regularly minting $100 billion plus tech companies, which the US is doing on kind of an annual basis?
It's a really good question. And the biggest thing that holds us back here is money. So we definitely have the technology capability. We definitely have the research labs. We definitely have the AI kind of frontier models. Everything's in our backyard. Weirdly enough, funding in the venture community is down in Europe. The flows are not as good as they are in the U.S. So in the U.S., I think everyone's woken up to the fact that this is the dawn of a new era. This AI adoption, cloud computing took about 5 years for the S&P 500 to kind of adopt. AI is happening much, much, much faster than cloud computing was. But here in Europe, for some reason, the taps are not really.
We're talking about domestic pools of European capital.
Global pools of capital kind of coming into the European market. The only glimmer that we have right now is on the deep tech side, where there's more money going into more science-oriented companies in Europe, but everything else is kind of down from 2024. When realistically, you should be up, right? Because the fundamentals are actually really good, and they're actually have accelerated in 25 versus in 24. So it should be the other way around. But I find capital flows in Europe are just really hard to.
So that's the biggest constraint at this point. It's not regulation. It's not lack of access to a single market. It's capital and needing to flood the space with liquidity.
And these are companies that are competing on the global scale and winning on the global scale and winning against their U.S. counterparts. But if they're funded at half the level, a third the level, 20% the level of the guys in the U.S., who do you think is going to win the global race? It's and that's the biggest problem right now that we have in the industry. Does
Europe need a winning foundation model, or is it okay that Europe plays in the application layer?
That's a good question. I think the foundation model, I think that race is for the big boys. There's a ridiculous amount of R&D spend going in. There are people who are trying to build kind of sovereign plays for national security, for just national identity into some respect. But I think that's a bit of a losing game because that's a lot of money. I think the question is, what can you use with these foundation models? There's $400 billion of R&D being spent by all of the big tech companies on AI, and most of it's going into the public domain via open source or via open models or via APIs. So how can you leverage these things and actually build the next generation of stacks? I don't think you want to be competing against the big boys as an earlier stage company.
Does the kind of investment, the kind of spend that we're seeing in the US, the hyperscalers committing to $400 billion in capex this year, the kind of connections and deals between NVIDIA and OpenAI and Oracle, and it continues, Broadcom, AMD, does that concern you? Does that seem rational, or are some red flags there for you?
It's reminiscent of the dot-com industry, of the circular economy that was in dot-com. Cisco is the biggest comparison when you look at what NVIDIA is. But then you look at you look at the return on invested capital on the hyperscalers. It's higher today than it was 6 months ago before they were spending on the next generation GPUs. So that tells me that the adoption on the compute side from the customers is actually quite there. It's like, I think this is a much faster acceleration, but the truth is no one really knows the answer to these. These are black and white questions. We won't really know until the dust settles, because we're in this fog, right, where everything is being built up. But it's reminiscent of dot-com on the one hand, but on the other hand, it's like much faster adoption, much higher ROI.
What are you most excited about when it comes to European tech, and what are you avoiding?
Yeah, we're super bullish on the next generation science companies that fuse AI with science. So we had a company called Cusp AI that raised $500 million, or a $500 million valuation. It's building next generation frontier models for material science. So it's basically the AI inventing materials. Super exciting, homegrown again. like in a race of basically 2 or 3, I think is going to win the race, built over here. We just funded another company that can make rare earth minerals from scratch in a lab, like synthetic rare earth minerals. Almost think of lab-grown diamonds, but lab-grown synthetic earth minerals. Homegrown, came out of Oxford. We wrote the first check. These kinds of companies in many ways can be pioneering and then use all these technologies to actually build really, really big companies. And they're standing alone, uncontested.
Really, really interesting in terms of some of the names, and particularly when it comes to rare earths, at a point when, of course, there is a huge focus on our dependency on Chinese rare earths. And Cusp AI, we had the founder on, very young. Chad Thomas came on, the CEO of that company as well, in terms of material science and the combination of AI and science. Hussein, thank you very much indeed. Am I right to believe you still haven't pledged allegiance to the King? You're based here in London. You're a proud New Yorker. You haven't pledged allegiance to the King. Is that right?
That is true. I have not become a subject of the empire yet.
OK, we'll see if that changes. Hussein, thank you very much indeed. I appreciate your insights and coming in bright and early for us. Hussein Kanji, founder of Hoxton Ventures, on the Midas list, the Forbes Midas list back in 2023, with some big exits to name, including Darktrace and Deliveroo. Staying in the tech space, the US has agreed to invest as much as $150 million in Xlight. It's a chip technology startup tied to former Intel CEO Pat Gelsinger. The move is part of the Trump administration's efforts to bring more chip-making capabilities back to domestic soil. The company is developing tech that would compete with one part of the extreme ultraviolet lithography systems offered by ASML. And Samsung has unveiled its first so-called trifold smartphone. The handset, called the Galaxy Z Trifold, is part of a small subset of folding phones that have 2 hinges, allowing them to transform into larger tablet-sized devices. Samsung is initially launching the phone in South Korea on December the 12th with a price tag of about $2,500 US. The Trifold will be sold in the US, China, Taiwan, Singapore and the UAE. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Here is the move that we've seen in Bitcoin, down about 30% since its peak in October. That is the move lower for Bitcoin, down about 30% from that peak, of course, in October. There's been a lot of focus in terms of ETFs and leverage and the washout that we've seen with Bitcoin down 5% yesterday. A little bit more stability today. We know that 80,000 has been a level that many analysts and investors have been watching. You're comfortably above that in the session today, but we'll see if that stability continues. Let's flip the board and have a look at Tesla, owned by someone who has his own views, of course, on Bitcoin. But this time, Michael Burry coming out, according to reports, and shorting NVIDIA and shorting Tesla. He has shorted NVIDIA, shorting NVIDIA, which is what he did a couple of weeks ago, shorting Tesla because of what he just says is a ludicrously overpriced, overvalued company. And he's worried as well about this potential $1 trillion pay package for Elon Musk and what that will do to the dilution of investors. So that's just one to mark. Tesla is gained about 6% year to date versus the Nasdaq 100's gains of a little over 20%, so it has underperformed, as you can see from the chart. The opening trade is up next. This is Bloomberg.